As we approach spring, the real estate market has not crashed, and keeping in mind that there is a proof to propose that we might be near the precarious edge of the most exceedingly terrible lodging implosion in ongoing American history, the cost details presently show no huge changes. In spite of the fact that there has been a small downfall to begin the year, it is a drop in a can contrasted with what has occurred since the turn of the 10 years. Right around quite a while back, the world got hit with an occasion that stirred up everything in the economy, including land. From WAC 2020 to June 2022, the cost of a middle home went up by 43% as estimated by the Case-Shiller list, and this mind-boggling rise was never remembered to be conceivable. Financial backers cheered as they capitalized on millions in this super development time, proprietors celebrated by taking out record high value, and purchasers developed frantic looking as a large number of months. Costs just deteriorated and more terrible. Following 27 straight long periods of close to explanatory development, the market at last slowly inhaled in June 2022. This previous summer, the Case-Shiller finished out, and as referenced prior, it had expanded by 43% since WAC 2020. The story was at long last beginning to change, and costs have declined for 5 straight months, falling 3.6% from the pinnacle. To many, this seems don't like anything in contrast with what occurred in the years earlier. As a matter of fact, at costs to tumble to pre-pandemic levels, the Case-Shiller should drop 28 extra percent. Nonetheless, there is mounting proof that this here is the beginning of another lodging melancholy like the one we saw in 2008. The proof for this can be found in stunning new information that is being refreshed each and every week. For instance, the most up-to-date Case-Shiller discharge uncovered that costs have now declined for 5 straight months. Beginning around 1986, which is the earliest perusing for the Case-Shiller, the market has never dropped multiple percent. The main exemptions are 2008 and a little 3.05% drop in 1990. Thus, while this small blip on the chart seems to not be anything, it's very critical, showing that something significant has changed in the business sectors. Numerous specialists conjecture that we are in what they call the forswearing period of the accident, with numerous confidential merchants declining to move on costs and keeping up with the deception of a market. While it could be baffling as a purchaser, we know from past crashes that not the confidential merchants are the cost vendors in any housing market. They are quite often the last to move. The gathering that moves costs in many business sectors is quite often the manufacturers, who are extravagant enterprises that move large number of units each month and have entire groups committed to setting costs. They comprehend the interest and supply better compared to any other person and have a lot higher motivation in dropping costs down to move stock. We saw this previous quarter that pretty much each and every serious developer has dropped costs down and included motivating forces like rate purchase downs to get individuals to purchase. Thus, while the Case-Shiller chart looks okay, it's not exactly demonstrative of what's happening on the ground at this moment. The latest profit reports from manufacturers uncover a few pretty difficult issues inside the market. Thus, while the impacts of these activities will get some margin to move into the current home market, it's irrefutable that these advancements in the new home space will make a difference. Simply suppose you were buying a current home, and another one down the road out of nowhere cut its cost by 20%, putting it comparable to the current one you were checking out. It would without a doubt influence your choice to purchase, as there is generally a top notch between the current stock and the new stock. Sadly,